Hey, this is Sasha. Thanks for joining me in today's video. And today what I want to share with you are 6 tips to reading and understanding stock charts. So stay tuned. I'll share with you some tips in this video. All right, so there's a lot of tips out there when it comes to charts, what to have on your charts, how to make your charts look fancy, pretty, all that kind of stuff. There's so many ways to go about setting up charts. So in this video, I'm going to share with you some tips and insights and give you some takes on some of these charts. So I'm going to start with tip number 1 is looking at multiple time frames. So as I go in and look at multiple time frames, what most people do or don't do is they basically look at, okay, well, here's an example of Shopify. And they might just look at, let's say, a 15-minute chart, and they're looking at it, and it's a very closed-off perspective and mindset. And when you do that, you're really zoomed in. It's kind of like looking at the tree, but then you're not backing up to see the forest. Like, what's going on? Yeah, is the stock down? Yeah, it is down. But when you back it up, it's actually moving up. So that's why when you look at time horizons, look at maybe a couple of them, like maybe a 30-minute, 65-minute, maybe a daily, might look at a weekly, and then a monthly. So looking at all those will give you a much bigger, broader view and perspective. So that's kind of tip number 1. Tip number 2 is keep your charts simple. Oh man, so many people complicate their charts and they just have a lot of bells, whistles, and other things going on within the charts. So they basically have like, they have these moving averages that I've got right now going on. They might put in other things like, let's say we've got Keltner bands, you got, let's say Bollinger bands, and they put all of these things on the chart. So you can see I'm flipping through these different different views and so on that I have. But some people, they put all these indicators and crazy stuff all over the place. And it just makes the chart so much more complex because then it's like, what do you look at? What is it that you're making your decision based on? So for me, I keep it real simple. It just depends on what I'm doing at the time. Simple moving averages or exponential moving averages, that's kind of what I use. These are the Fibonacci moving averages. That's one of the things. But even then, you could just do your own thing and not even look at those or just have 1 or 2 of those. Some of those charts that I have, if you look at them, they're very simple. I've got 2 moving averages right here. This is kind of the one that I normally look at right there. It's just very simple. Doesn't have to be that complicated. All right, so tip number 3 is be comfortable with your platform. Okay, so a lot of people, you can see this is the platform I use. This is TC2000 by Warden. You can get a discount code on my website at tradersfly.com for it, by the way. And I've been using this one for years. So what I could do is flip around these charts pretty quickly. I could custom code different things here for check marks if I'm looking at anything like that. I could even do, like, let's say I'm doing like a big watch list, you know, I could pop things out at different screens and monitors. So here I'm like, okay, well, what are the US common stocks with a up volume? What are the US common stocks with moving average crossing this or that? So what are some stocks bouncing after a pullback? So you could really customize all this stuff. Not that you have to do it in this way, but I could do things where I'm looking at, let's say, a 2x2 view, grids like this, the watch list, you know, recording videos. So you can really just mess around with this in so many different ways that I find many other platforms, like web-based platforms, are now very popular. They're just not as powerful, unfortunately. They're not. And I know some of them are very popular, but they're not as flexible as this. They're not as quick as this. This one still always comes up on top for me personally. So, you know, you could do so many different things with this, like, you know, custom coding, like once they're above a certain moving average, highlighting all those things. It's fantastic. So anyways, get comfortable with your platform. Okay, so another thing is have a checklist. So if you've noticed on one of my other screens here, and we go over here, is have a checklist of what you kind of get in and let me replace this column set. So let's just look at EMA checklist. So I might have like a checklist. Okay, well, does that stock breaking, you know, are the moving averages kind of working in the favor or they're not? I could have a different checklist, like let's say this one where I've got more things like a Bollinger Band width. Is it, you know, wider? Is it not as wide? That kind of thing. So if it's there, it'll check mark things. Now, you don't have to go to those extremes. I find if I have something like that, it's just a lot easier. But if you're doing a checklist, like let's say I'm checking my different viewpoints. So it's like, okay, I go to this stock, I check this viewpoint. Is it above a certain moving average? If yes, move on. Then I might look here. Is it, in that same range or not? Then I might go to another viewpoint, Bollinger Band. How does that look? So it's like check 1, 2, 3, 4, 5. So you're checking all these different things. You're checking the volume. You're checking, what is your checklist? So having a checklist is really handy and useful. Let's go to tip number 5. Know that not every setup will work 100% of the time, right? You're dealing with technical analysis. So even if I look at something like a Procter & Gamble right here, and I'm watching this right here, this looks like a breakout at the beginning, but then it's sold off. Technical analysis might work more of the time than, let's say, 30% of the time. It might work, let's say, 70% of the time. But that means that if you do 100 trades, you'll get 70% of them that are successful if you've got a 70% success rate. So that means when you have something like this, well, that could be, 1 out of the 30 that didn't work. So you gotta keep going with it in order to really understand and create kind of success, because this is a probabilistic type of business, right? It's not just, hey, okay, one trade, oh, it didn't work. Oh, okay, now I lost a bunch of money. No, it's about doing, like, let's say 100 trades, 50 trades, 20 trades, and seeing in that series if it works or it doesn't. Okay, let's check out the next one here, and then the final one is that technicals are not always necessary. So I have some people that constantly, say, oh, I gotta do the technicals, but the reality is sometimes you don't really need the technicals. So if I go in and let's just say I do a spread on Facebook, if I know already Facebook's just been spread to the moon, or it's just been going up for a while, let's just say you had 6 days in a row that's been up really fast, I could, let's just say, sell a vertical call, which is option spreads, and now I'm looking for it to pull back. And if I do something like this, I don't really have to know too much about technicals. I just have to know and understand price action and behavior. That's really all it comes down to. It's just looking at probabilities. And if I'm doing this trade periodically, every time the stock is up like 5 days in a row, well, on day number 6, I put this trade on, and if I am making $1,392, well, as long as it kind of stays with, I don't lose more than $1,400, I should be okay, because if I'm doing it time and time again and it's working out in my favor, I don't really have to know too much about charts. Yeah, does it give you a little edge to know a little bit about charts? Sure. But don't think that you totally have to be a full-fledged guru on technicals to be able to trade consistently. You could do the same trade, like let's say you're doing an iron condor, and if I'm putting on an iron condor right here, okay, and if every time this trade is going against me on the upside, then I probably should make sure I'm a little bullish on my iron condor, whether it's moving the whole thing to the right or doing less contracts on the call side, that kind of thing. But the point is that you don't have to be full-fledged technicals to predict price to understand, hey, we're always getting in trouble on the right side, so I probably should make it slightly bullish. So anyways, those are kind of the 6 big things that you should watch out for if you're doing some trading and you're looking at the charts, and some big tips for you to give you some insight. So I hope you found this helpful, insightful, gives you some things to think about as you look at charts. Remember, it's not everything, it's just one piece of the puzzle. Position management is much more important than just knowing charts and technicals. So thanks for joining me. If you want to check out some great freebies that I have, click the link right over here, and you can always subscribe to the channel or see other great videos. Thanks again, and I will see you next time.